Is there a surge of foreclosures on the horizon that's going to crash the housing market? Hi everyone, Mike Tilford here. I've been hearing this question come up a lot recently, and although nobody can predict the future, I believe that this doomsday scenario is unlikely to occur, and let me tell you why. The current housing market is growing stronger every day, and more Americans are returning to work. In addition to this, a faster than expected recovery in the housing sector is already underway. This isn't to say that there aren't millions of households struggling right now, and there are going to be foreclosures as a result. However, if we look at the numbers, things aren't as bad as the doomsayers will have you believe. A good metric to consider when trying to predict the future is the number of households who have been granted loan forbearance. For those of you unfamiliar with the term, loan forbearance is a temporary modification of your payment obligations on a loan. This either means temporarily reducing your payments or suspending them temporarily. The number of homes in forbearance have increased from the beginning of the pandemic until a peak of approximately 4.76 million homes at the end of May. Since that time, the number of homes in active forbearance has decreased and is currently sitting around 4.1 million homes and is sitting fairly stable at that number. Of the original 4.2 million families that were granted forbearance, just shy of 2.6 million families got an extension of their original forbearance. Many homeowners have once again started to pay their mortgages, paid off their home loan, or never went delinquent on their payments in the first place. They may have applied for forbearance out of precaution, but never fully acted on it. The reality of the situation is that the housing market and homeowners are in a much better position than many may think. According to John Burns Consulting, 42% of homes are owned free and clear, and the remaining 58%, the average homeowner has $177,000 in equity. That number is keeping many homeowners afloat today and giving them options to avoid foreclosure. Like I said before, times are still tough for millions of households, and according to Adam Data Solutions, there's a potential for the number of foreclosures to increase throughout the country. But it's important to understand why these foreclosures likely won't rock the housing market this time around. They state that the United States faces a possible foreclosure surge over the coming months that could more than double the number of households threatened with eviction for not paying their mortgages. This number may sound massive, but it's actually much smaller than it seems when put into perspective. Today's actual quarterly active foreclosure number is just under 75,000. That's over 7.5 times lower than the number of foreclosures that the country saw at the peak of the housing crash in 2009. It's clear that even if the number of quarterly foreclosures were to double, they will only reach what, historically speaking, is a normalized range of around 150,000 nationwide, far below what upended the housing market roughly 10 years ago. Equity is growing, jobs are returning, and the economy is slowly recovering, so the perfect storm for a wave of foreclosures is not realistically in the housing market forecast. As Odetta Kushi, Deputy Chief Economist at First American, says, "Alone, economic hardship and a lack of equity are each necessary, but not sufficient to trigger a foreclosure. It is only when both conditions exist that a foreclosure becomes a likely outcome." While it is terrible for any family that is suffering from economic hardships due to the pandemic, today's homeowners have more options than they did 10 years ago. For some, it may mean selling their house and downsizing with that equity, which is a far better outcome than foreclosure. So what's the bottom line? Homeowners today have many options to avoid foreclosure, and equity is surely helping to keep many families afloat. Even if today's rate of foreclosures were to double, it will still only hit a mark that is more in line with the historically normalized range. A very good sign for homeowners and the housing market. Well, that's it for today. I hope I have made you a little less fearful about the future of the real estate market. If you enjoyed this video, please hit that like button below. This is still a fairly new channel, and each interaction helps my channel to grow. And if you have any questions or suggestions for future videos, feel free to drop me a comment below. And as always, I'm never too busy for your referrals.